Wow, so good morning. So YouTube now. Let me around. So let me confirm. YouTube now. Let me around. So good morning, everyone. All right. Okay, good morning, everyone. I believe everyone can hear me. Thank you. Thank you. I see you guys. Let me share the link. Just shortly, we are going to be diving straight into the chat, and I'm very hopeful that money will be printed from today's engagement. So just a moment, let me share this link to the appropriate quarters, right? So just a moment. All right. Yes. Good morning. Let's confirm that you. Yeah. Okay, I can see my people. Good morning, everyone. Yeah. Good morning, all the way from Zaria. Good morning, Michael. Hey, good morning. So again for another Wednesday live trading session, and I do believe that money will be made today. Like, I'm pumped up. Money has been on the prints on my own end from gold. So this morning let's see what we can do so the money can go round. So the good thing about the market is the money you can make does not stop the one I can potentially make, and the one I can make does not stop the one you can also make. Henry, good morning. I see you. Everyone is being recognized. So we are going to be going straight to the chart for the want of time. So, yes, let me leave these disclaimers out there. First is that do apply proper risk management. Not because you know me or you believe in my trading skill, then we'll give a signal. Then you open lot size as though you are not a responsible folk. Please don't do that. Proper risk management. So I used to humorously, who is calling me by this time? I used to humorously say it that the day you make your biggest profit in the market, you wake up that day and not know that this is that day that you make your biggest profit. The day you blow your account in the market, wake up and you won't know that you blow your account. So I'm saying this to say, at every point in time interacting with the markets, just do what is the right thing. So that will keep you, safe and longer in the market, right? The next disclaimer is you are not under any duress to take my trade or the signal. So just in case after the analysis and you feel it doesn't gel well with you, please, so you can jejely leave it or let other people who trust in the analysis take. Number three is just in case you've gotten to the threshold of your daily limits, either in profit or in loss, you can decide not to take the trade. However, the live trading session promises to be profitable, but the fact that nothing in the market is conclusively said and can be said to be 100%. So that's why every parameter of which to keep yourself safe in the market should be adopted. And I'm a big fan of it and a big advocate of doing the right things in the market. The number is gently and gradually increasing, and I appreciate every one of you. Please, you can feel free to share the link to someone who you think that this live trading session can be of benefit to. So before I go ahead, if you've not subscribed to this YouTube channel, please go ahead to subscribe to the YouTube channel. So I think next month, following me on Instagram, I've been dropping short reels, educational content. But I think from next month, I will start dropping proper YouTube video. You know how the quality of I put out proper YouTube video. So go ahead to sub the channel. All right. So I think that's it. Okay. So let me give a report of the last week trade that we took. The trade triggered on it triggered till the market opened. It was going in profit, but I checked my charts by around the 9 a.m. It hit SL. So it hit SL and still went our way. Of course, it's a loss. So SL is SL. Whether it went our way or it did not, it is SL. But it went and almost hit the take profit. So I was reconsidering and looking at the trade. Could it be that the SL was too tight, or could it be that we entered too early? So that's what it should be in the market. Your analysis can be right, your speculation and your directional bias can be right, but the time into the market is as important as what you are doing. So your directional bias can be right, but if you enter at the wrong time, that can be to your disadvantage. So let's say the market is going to go in your direction and is retracing, and you've not waited to see the retracement happen completely. You jump in. So the retracement will still happen and the market will still go your direction. Then that means that it would have taken you out and goes your way. So I was looking at it and I didn't find anything that we could say that okay, this is it. But just that the stop loss was a bit tight because I was looking at the markets, not retracing, or the allowance in my view was okay, 20 pips SL. But then he just tapped the SL and started going our way. However, it's a lost trade. We are back at it again today. So if you belong to my private community, I can see subscribe. Sharp, sharp, sharp. Thank you. So if you belong to my private community, you know that the this week, yes, today is just Wednesday, but it's been an amazing week. It's been an amazing week. So let me even say this. I don't used to say it. If you've been following my live trading session, I just finished teaching you guys stuff because my live trading session, you not only make money, but just looking at me analyze the markets, you can understand my thought process on the chart, and you can take advantage of that, and it can sharpen your views on the market. So just yesterday I made a post, so someone responded to it on my WhatsApp status. So if you follow me, you would have seen it. So the guy was thanking me for how he has been coming for my live trading session and how it have shifted and broadened his horizon in the market. So over and above that, you're gonna make money. But I'm a proponent of the fact that the trader that makes the money is better than the one that takes the signal. So you can come and yes, over and above the fact that you're gonna make money from the signal. But my idea of the live trading session is to actually enlighten you so that even if of course the live trading session is not every day. So on your own, based on what you see and how the market is being analyzed, you can use that to you know you can use that to make money on your own. So what I was saying before I glided was that I don't used to talk about this, promoting my private community or my mentorship program. But if you're here and you want to take advantage of my private community or my mentorship program, so you can actually reach out to me. I don't know, should I type? Okay, just reach out to me on Instagram. So I'm going to respond on from there. So I can see the number is increasing. So thank you guys. Thank you guys. The number is increasing. Let me give you guys a shout out. Just calm down. We're gonna make money today. But let me first of all give you guys a shout out. So the number is increasing. I can see that we are 10 in numbers right away. So guys, today smells money. We are going to make money. Let's go straight into the charts. Okay, so if you want to join my private community, you can reach out to me on Instagram. So there we meet, we have sessions every week. Private live training session on Tuesday. We also have a weekend session into markets open. That's Sunday evening. Every Sunday evening by 8 p.m. We'll gather to look at the markets and prep ourselves into having a beautiful and amazing week. And I believe with that it can shift you in your trading career in a no small way. So thank you everyone for being here, and let's go straight to the charts. Okay, let me hear you guys drop pairs of consideration. I like getting pairs of consideration. Let me not just stay with the chart I'll be looking at. So the first one, I will run with it first. So be the first to comment. What's your pair of consideration? Let's look at it. Let's look at it. If there is an opportunity there, I'm going to put it on my live account and I'm going to trade it. And so that's how we've been getting trades that we took here. Someone will just sample a pair and we'll look at it, and boom, there's an opportunity. Guys, open your trigger. Let's shoot, let's shoot, let's shoot. So drop your pair of consideration. If there is none at the count of three, I would go to my charts. Okay, I can see Obonna John dropping GDP USD, first person GBP USD, second person GBP USD. Let's go. So GBP USD gave me a sweet trade yesterday. I closed at about 1:3 because I didn't want to hold again, but it's went straight to where I speculated that it would get to. That's like 1:5. But then today is another day. Let's see if there is an opportunity on the pair again to make some money. So let me share my screen. Boom, 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 boom. Right. Okay, my screen is already up. Oh, this is good. No, 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 no. Let me go to GBP USD. Okay. So let me reanalyze and see what we can possibly be looking at as the next move in the market. Okay, so a proper top-down analysis. Let me start from, yes, daily time frame. So my analysis usually start from 4 hours time frame, but going to daily time frame to see a clearer picture of what the market is doing. So look at this high, and the market is at the point now. 4 hours time frame. So bearing in mind that this is the high that we speculated that the market is going to get to, but then if you now look into this pair well, you will see a shift of market structure. You see a change of sentiment. So let's pay attention to this. So this is the high. Now the market retraces and pulled back. This high did not take out this high to make a continuous pattern of higher highs and higher lows. Now this is the low. The push to the downside took out this low, giving us a change of character. So you can see this market. Someone was asking me, posted, the people that see my status was asking, how do you what did you see that made you take the trade? So you are here. I believe he's here. So just pay attention. So from there, we can see if there is a possible move that we can actually speculate again in the market. So now this is pushed to the downside, giving us a change of character. So let me zoom into 15 minutes time frame. So see what happened here. So this is the change of character to the downside, and we have this break of structure here. This break of structure here. So the look at what the market did. So this is high, and now the market's change of character to the downside. This now this break of structure here, the market came back to the OB here that sponsored that break of structure. Then we are in for the trade, something like this. So we have, this is the high. No, I didn't get this right. I want to explain to you guys very well. Now, pay attention. Higher highs, higher lows. So the market, instead of doing another high, a low to make a high, now the market gets pushing to the downside. So this has given us a change of character to the downside. So what we'll now have there, the market did this, giving us a break of structure to the downside. Now this is break of structure, and you can, maybe you spot an OB here. This is break of structure here. Now the market, you are looking at the market to come back to this OB that sponsored this break of structure to the downside here. That's how the trade was caught. So that is that. Let me go back to, let me leave this. So now the trade was a successful one. But now that the markets, we are done with this, let me take this off so we can look at the markets clearly again. So what are we looking at? So I'm of the opinion, and my speculation is, now, yes, we could say that we are on an uptrend, no doubt, but trying to catch a reversal at the peak of the market is first, it can be risky that if you don't find any reason to that, the market can keep going, um going that direction. But then if you find a reason to say that the market sentiment have shifted, let's say this is a bullish sentiment market and it shifted here to a bearish sentiment and you ride on the trade, possibility abounds that we we can have a movement like this. The market will keep moving lower highs, lower lows, almost to a level like this. But however, let's see let's see what the market is doing. So I'm still very much a bearish perspective to this guy. I'm still very much bearish perspective to this guy. The market, I'm looking at the markets rallying down to this point. But the market does not move in a straight line. The market buys, sells, but gently taking shape on a direction is going to. So I'm looking at, we have in another break of structure here. So we have another one here. So let me go to 5 minutes time frame. We'll have, on this 5 minutes time frame, we'll have this. Okay. We'll have this. So anticipating more sell. So let me see if we are going to enter now. Oh, let me see how many pips we can risk here, because I'm finding an instant execution trade on this guy. Let's see. Okay, let's do a 20 pips, because the markets have started moving already. Okay. Okay. 1 hour for targeting. So this is a 2.9. Let's say 1:3. So I'm going in on this trade. Instant execution by sell on GBP USD. Instant execution sell on GBP USD. So let me take my phone. I'm going in instant execution sell on GBP USD. So let me take my trade before the market leaves me behind. So let me so this is your SL. Let me open this guy. Okay, so you can look at this. I believe you can see the coordinates, your SL and your TP. So look at the screen. You can take a screenshot so you can input your coordinates, your SL and your TP. So it's an instant execution trade on GBP USD for SL. So let's see. I'm hopeful that it's going to be a winning position. So put your SL, guys. Put your SL and your TP. Let's see what the market will do for us today. Okay, so I believe we should be done with that. Let's see what the market will do for us today. So if you've taken the trade, let me know that you've taken the trade. If you've taken the trade, let me know. So I've taken the trade on my live account. I'm very hopeful that it's going to hit take profits. So someone dropping Euro USD. Euro USD moves almost to give us almost the same thing with GBP USD. So I can see AUD USD here. So let me look at EU, then we look at AUD USD. So this was yesterday. Mm. So you can see it's almost the same pattern, the same movement pattern that EU and GU is printing, but just that GU would move faster than EU. Then EU just comes later to catch up. And so it's not even ideal and wise to be on a trade on GU and still open another position on EU unless you just want to split your risk into different pairs. But most likely, if you're going to have a winning position on GU, you are going to have a winning position on EU. So if one is hitting SL, the other most likely is going to hit SL too. So that is that. So let's leave Euro USD. We are already on a trade on GBP USD. So let me look at AUD USD to see if there is anything on it. AUD USD. Okay. So looking at this guy, AUD USD, let me start from 4 hours time frame. Why is this thing not showing me? So with this, I'm finding it difficult to look at, okay, are we on an uptrend or a downtrend? So look at this choppy movement here. So if you shrink, you see how it's happening here. But then, nevertheless, let's see what we can do out of this. Okay, so let's have our structure. Let's start with this 4 hours time frame. Okay, so okay, so I'm marking these to show us something. So now, looking at this is 4 hours time frame. Zooming out to see clearly. Now, this is break of structure to the upside, and this is the last low. So everything happening within this area is internal structure. So let's go forward. So now look at this very well. This is market structure, and now see break of structure to the upside. Now, question is, at what is the level that initiated this break to the upside? So some may take this, but this is actually the one, because this is a move here. Now, the market does not move straight in a straight line. So if it was to be a straight line, this is actually where the move started from. So this is the move here. So now the market will always go up, go down, go up, go up, and go down. So that's the fractal nature of the market. So I won't be looking at these levels here. So I'll be looking at, if this market is going to keep coming down, I'll be positioning for a short movement here. So let me zoom out to get the other block. So before, I used to make the mistake to think, okay, this is it. But then, so look at the market from a broad perspective. This is where we had the market's break of structure and to the upside. This is the where the move was sponsored from. So let's mark this. So at this internal structure, what are we looking at? I'm looking at the market. If the market is going to keep coming down, I won't be looking at anything here. So my interest will be here at this level. So these guys, everything here can serve liquidity, if you say, we will say that. So for AUD USD, let me see. So if I'm looking for a buy movement, a buy from this point, so I'm actually speculating that the market would keep rallying down to this point. So question is, can I find a sell opportunity to join the market to the downside? So if that happens, so now look at, we have this break structure to the downside. There is one here. Let me be marking it out so you can see. There is one here. Mm, okay. So now this is break of structure to the downside. Where did the move start? This is it. This is 5 minutes. Okay. Picking out my 5 minutes will be, but why I will not want to go in for this, because I'm already on a trade on GBP USD. These guys are somehow correlated, but where the correlation is high is between GBP USD and Euro USD. So, but the correlation also affects AUD USD. So I'm looking for a short position still on this. However, I may not so want to personally be on the trade, but you can take a screenshot and let's see what happens. Let's do 15 pips SL. To this low, at least to this low. Let's see. Let me even reduce the stop loss. The 15 pips is too big for this setup. Let me do 12 pips. Let me even go down the more. I may still consider to take this. So why I'm reducing the SL is so if you look at this setup, so there's no point taking your SL too far with a setup like this. So if the market is going to violate it, it will keep going up. So if you like, put your stop loss 50 pips when it should be just be 10. The market is still going to go and hit it. But if your stop loss is small, and you know that is is okay for the trade to run, what happens is that if you're on the winning position, if the trade goes your way, the risk to reward ratio on the trade will be high. So this, let me just make it round number of 10. So this is 1:4 arrow trade. So at least TP level to this point, then anything that the market is doing from here, then we can now all watch it together. So that is for AUD USD. So you can take screenshot of this setup, but I'm not going to be calling it out as a signal. We're already on GBP USD. But however, so you can just take advantage of this as someone who is here. When the market gets to these points, you can decide to take a trade. But I'm still watching it, so I may also take the trade if the market comes to it. So this one, let's keep looking at it. So XAU USD gold. Okay. So gold is, I consider gold to be bullish. So of course you can see, let me go to daily time frame. So you can see that even on a daily, gold is bullish. But however, it does not mean that when you now scale down, you can't find a selling opportunity. So it depends on what you are looking for in the market and the kind of trader that you are. So a scalper can find a certain opportunity from one point to the other. So you don't need to know what is going to happen at the market long term. So what a trader should focus on is what is happening, what the market is most likely going to do from this point to the next point. So catch that move and you're off the market in profit. So let's see what we are looking out for on gold. So as you guys can see, so if you look well, you have this break of structure to the upside, and this is the point the move started from. So the way I interact on gold is these black lines are power lines. I don't know how to explain it to you guys, but these are power lines that anytime the market comes to it, I always look out for a reaction on it. So since I've already seen that I have this break of structure here to the upside, I didn't mark it because it's my chart and I understand what I'm seeing. So this is the point that the move was engineered from. So the markets rallied up and pushed, came back to this level here, moved up, and as he moved up, of course, retracement will always happen. I expected a reaction at this point, so I put out my entry. These points, it tapped in, I enter, and this is like 1:5 RR trade. So, but I'm looking at the market to keep rallying up to these points. I'm looking at the market to keep rallying up to this point. But the thing is that at this point now, you can consider entering gold now. You can consider entering gold now because you can't jump in for a buy. Either is the market showing you a sell opportunity. So where one can likely find any reason to take any action on this guy is if the market comes to this point. If the market comes to, let me take this off so we can see clearly. Let me also take this off. Let me also take this off. So let's analyze and see. So look at this, pay attention to this. So now the markets have not taken out this low. So the week is also important. So you see that this is the point, this is the level that started this move that broke structure to the upside and the market retraced. The markets have not come back to it to even break it to say that we now have a change of character on a broader perspective. So everything happening here is still internal structure. So now this internal structure, when you understand this, you now see now the markets, these points we have this shift in market structure on this smaller time frame. So now, but pay attention to this. Now, this is internal structure. Reactions and actions can still be happening here. So what the market is going to possibly do is if the market comes to keeps buying, gets to this point that broke this to the downside, what we have is possibly going to be a retracement for the market to keep pushing up. So we won't be looking for a long-term sell, because if you see this by my explanation, this move did not break structure to the downside for you to say that, okay, when the market comes back to it, then we are in for a long-term sell. If this had happened, so we'll see that this is a clear change of character, so when the market comes back to it, then we can now start shorting the market for a long-term sell. However, but then this is just an internal structure. So reactions and actions can still be happening. So what we can likely have on gold is the market comes to this point, is going to make a reaction for a retracement sell. When the retracement is done, I don't know to what extent it will be. So, but then if you entered a trade like that, like this, you may just be active watching your market, or you can just put TP here, this next point. So if the market gets to it, then fine, take your you can take your profit while the market reverts to a buying position. So I'm expecting a reaction on this guy, on this guy at this level. So but then you just be patient to have the market, play around, gets to this point before you take action. So at the point like this, you can consider buying gold, and you can also be looking at selling. So just be patient to see what the market is going to do. So why I said, because the market is still going up, you won't consider to buy and you won't consider to sell. So the market can actually do something like this, retrace, then it still keep going up. And so because you can enter now and the market retraces, take you out on SL, goes up, and it will still be in your direction. So but you need to enter at the point where you know that you are entering at the best position that you can. So then you can have your trade run. So for now, you can just watch good, but I don't think there is any action to take unless you just want to take the risk. So you enter impulsively, and is the same thing. If you enter impulsively, where are you going to put your your SL and all that? So don't be that kind of trader that your SL will be 100 pips, then your TP will be 20 pips. It doesn't make sense. It doesn't make any logical sense. Someone is asking, okay, does this your strategy work for good, and what is so special about good? Mm, well, so let me finish saying what I'm saying then. So what I was saying is, don't be that kind of trader who would have 100 pips SF for an instance, and your TP is 20 pips. Then you now uh, say, okay, TP1 20 pips, TP2 30 pips. So you hit TP1, you will be like first TP hit. No, if you ask me, that's the wrong way to look at the market. It should be that TP is called take profit. So if you are looking at TP1, TP2, TP3, TP1 is first take profit one. So that means that you are taking profit, like first take profit one means that, let's say you are risking $50 or 50 pips. Before you consider to take profit, your first take profit, should it not be equals to what you are risking? At least. So if you are risking 50 pips, it should be before you even talk about TP1, your trade have done 1:1, which is you are risking 50 pips and you're in profit of 50 pips. That's when you can say that you've hit TP1. Not your TP, your SL is 50 pips and you are saying that you hit TP and your trade is still in 20 pips. That's like less than 1:1. It doesn't make sense. So it should be that if you are risking 50 pips, your TP. Before you open your mouth to say that you've hit TP1, it should be at least 50 pips. So then from there you can now start counting. Okay, TP whatever. But it should be that before you consider to say that you've hit TP, first TP is that what you are risking, what you've made on the trade is at least pay attention to my choice of word, at least equals to whatever you are risking. So if you are risking 30 pips on the trade, before you say that you've hit TP1, that trade should have done 30 pips in profit. So if someone gives you signal, learn how to plot the coordinates. Learn how, so you don't be, I'm taking out time to teach us this because most of the time we don't understand the dynamics to this. So that's why people say that, oh, signal blow their account, because the signal provider, you are too gullible, or you don't have the time or the patience to sit down to learn how the dynamics works. It gives you a signal and the SL is 100 pips. Then you write TP1, TP2, TP3. Then TP1 is 10 pips, TP2 is 20 pips, TP3 is 30 pips. So the market just taps you in, moves your direction 10 pips. You will now say, ah, we hit TP1. Everybody is smiling. But whereas if eventually you lose that trade, your TP1, TP2, TP3 can't even account for the loss. So it doesn't make sense. So it should be that you look at the market from the perspective of risk to reward ratio. If I'm risking $10, it should be that this trade has the potential to do at least $10, at least. But then the reasons of it as it were is you are not even expected to close out on 1:1. So that's why I'm telling you guys that if you are risking $30 or 30 pips, let's say 30 pips, before you even say you hit TP1, it should be that your trade have done 30 pips. So 60 pips is 1:2. So learn to look at the market from the perspective of arrow. That means risk to reward ratio. I'm risking 1% to make 3%. I'm risking 2% to make 6%, whatever. So with that understanding, you will be fine and you won't just be taking any kind of position in the market. So even if you see a setup and you look at the setup where you should put your TP and where you should put your SL, the trade does not afford you, the trade cannot, with what you can see, the trade does not have the potential to give you at least 1:2 of whatever you are risking. In my opinion, you can just leave the trade unless you just want to take it. However, anything can happen in the market. So if you are fine with taking 1:1, well, good and fine. But in the long run, it's not going to do justice to your account because let's say you hit SL multiple times, can your TP take care of the SL? So we can take this trade and before us or it can hit TP, it can hit SL. I won't be perturbed because I know that the next trade I am going to take, I can enter and do 1:5. If I do 1:5, even if we hit SL on this live trading session, you can't say that this guy, he does not know what he's doing. No, it's SL I hit. I can enter the next trade and do 1:5, and that's the way to trade the market. Not that the reverse is the case. I don't know. Nobody, it's not as though anybody vex me. So, but I just needed to pour this thing out, enlighten us, and give us a clear perspective on how we should view and approach the market. All right, so let's make progress, guys. Let's make progress. Let me look at the trade once again. Still heading to where I don't know. I'm still looking at it. So you can go and hit these points and start dropping. So let me also say this, when you take a trade, just allow it to play out. If you've done your this proper risk management and you know that your SL is in place, just allow it. And not because it's going in loss, then you impulsively close it thinking that is going to hit your SL. It can keep going up, then start dropping. So I used to do it in my early days of trading. So it's actually a journey for us all in the trading space where you make mistake, and as you grow and advance as a trader, you will know that okay, oh, this was the mistake I used to make. So you don't just enter a trade and you expect that the trade start going your way. It's good that if it happens that way, but still give room for retracement and pullback. So it can be that the pullback that you are seeing, that you will think that the market is going to hit you out on SL. So the pullback happens and then you impulsively close the trade. Then now the trade starts dropping or going your direction and go and hit your TP, whereas you've already given up on the trade. So a winning position, a trade is not a winning position until you close the market, until you close the trade. Anything can happen. And the trade is not a losing position until it hits your SL. So until that is still a trade. It hasn't gotten to the target, whether SL or TP. So let's make progress. So this guy is asking, Michael is asking, does your strategy work for gold, and what is so special about gold? Please, I want to know. Okay, so for people that trade gold, the thing about gold, why is as though there is this special thing about gold is one, gold is a very volatile pair. So, and people who don't understand how to trade it, most of the time, is gold that blew their accounts. So the pip count of gold is higher, and if you enter gold, most of the time, why people blow their account on gold is because they don't understand how to risk on gold. So if you calculate your risk properly, it's almost the same as you are trading any other pair. So let's say you are trading a prop account and you are risking 1% of your account. So this is where using position size calculator is very important. So you risk let's say 1% of your account trading gold, and you do your calculation very well. So if the trade hit you out on SL, is 1% that you are going to risk, is 1% that you are going to lose. So in my opinion, I would say it's just like trading every other pair, but just that gold is, yes, very volatile, and the pip count is much and moves very fast. So if you understand how to trade gold, you are going to gold, I would say, can make or mar you, in the sense that if you know how to trade gold, you will always be jollofing. You will always be smiling. Like this trade this morning on gold, it's almost 1:4. That is to say, even if I don't want to trade again, 1:4 is okay for a trade. You can go and do other stuff with your life. So it moves so fast that when you enter your position, the fate of that trade can be decided almost immediately. That is to say, if you are hitting SL, you are hitting SL fast. If you are hitting TP, the TP can also be fast. So the fate of the trade can be decided almost immediately. That's for trading gold. So it's not like those slow pairs that you enter and it will just be moving small, small. It moves fast. So, and when you understand how to trade gold, is you are going to be fine. So I think in summary and in conclusion, yes, gold is volatile, but is still a is still a tradable pair. So just look at it as though you are still trading one of those other pairs. So that's it. Oh, so this is 1 hour already, and at this point, I think this is the place we'll be wrapping it up. I've taken out time to do analysis on different pairs, and also shared my thoughts and insights on things that I know that can help us and do us well as traders. So if we stop, I wanted to say like a pastor, if we end the service here, have you not been blessed? So let me still ask. If guys, if we end the session now, did you gain value? Did you gain value for your time? Did you gain value for joining this live trading session? So interact with me. First of all, let me know if you're on this trade that I called out. And two, if we end here, did you get value for your time? So I want to see responses on the comment section, guys. I want to see responses on the comment section. Let me know, let me know, let me know. I want to see something on the comment section. I'm waiting, I'm waiting, I'm waiting. I'm waiting. So before you leave the session, please go ahead and subscribe to this YouTube channel. Go ahead and sub this channel. Go ahead and sub this channel. So Henry is saying, yes, sir. Did you gain value? Yes. Okay, I think so. So that is it. Go ahead and subscribe to this YouTube channel. So Michael, are you still on this session? Please let me know if what I communicated answered your question or did justice to your question. I had like to know if it did justice to the question that you asked. So I'm very hopeful, guys, that this guy is still going to push to the downside, is going to tank. So hold on to the trade, hold on to it. Okay, okay. Celestine Okechukwu. Yes, 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 yes. Okay. So if I end the session now, I know that I did not waste your time. So guys, I think this is the place we'll be wrapping it up for today's engagement. So till we meet again, till we interface again, keep trading and keep making money from the forex market. So if you want to join my private community where I do more in-depth stuff with them, so you can reach out to me. Let me type out this business line on the comment section just in case one may want to reach out to us, reach out to Moon Forest on WhatsApp. Let me type this number 003166359. So if you want to reach out to join the private community, this is a WhatsApp line. When you type, you would be attended to. All right. Okay, okay, okay. So I see your responses. All right. So I'll be ending the session right away. So take care, guys. Till we meet again, till we interface again. Keep trading and keep making money from the market. Bye.